Mortgage rates dropped significantly today, Monday, December 4th. Is this the right time to jump into the housing market and buy a home now that rates have dropped? Or is this just fool's gold and it's tempting you into something that's not going to be good for your financial future? We're going to talk about that in this video and really what's going on with mortgage rates. Because in my past few videos, you've noticed how I've spoken about how there's not that many buyers out there to purchase these mortgage-backed securities, which is part of the reason why mortgage rates are so high. But today we saw a significant drop, especially in with NEFQ, the local bank that posts their mortgage rates online on a daily basis. They had stayed stable over the past couple weeks when the 10-year treasury yield was dropping significantly. Their mortgage rates didn't drop. And this is really important because mortgage rates tend to follow the 10-year treasury. And now, with the 10-year treasury finally stabilizing, NEFQ dropped their 30-year fixed rate mortgages to around 6.875%. So what happened between last week and today, Monday, December 4th, and is now a good time to take advantage of these low mortgage rates, the lowest mortgage rates we've seen really in probably about 6 months here, as they dip below 7%, at least here in Vermont. We're going to talk about all that in this video and what it means for you as a buyer or seller in this market. But before we get started, my name is Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate here in Vermont. If you have any real estate needs, reach out to me directly. All of my contact information is in the description. I would be happy to help you, whether you're here in Vermont or somewhere else. So let's get right into it. This chart here of the 10-year US Treasury, we can see what's been going on where the 10-year US Treasury was at about 5%, which is when mortgage rates were at about 8%, and then has dropped steadily since then to 4.25% now, 4.259. It's up about 3.5 basis points today. So relatively flat, not a huge movement today in the 10-year US Treasury. But with the mortgage market, with New England Federal Credit Union, my preferred best source to see what's actually going on with rates, because you can call New England Federal Credit Union today, lock in on a mortgage if you're under contract at a home, and this is the rate that they're going to give you. They just post it right online. Not a lot of mortgage companies do that. So when you get the average rate on a website like Google, that's kind of the average rate between all of these mortgage companies. But with NEFQ, it's the best possible rate that you can find around, at least from my experience working with them. They usually have the best rates and they post it right on their website. So it's great for us to use as knowledge to know what's going on in the overall housing market. Now, if you remember from my past videos, the rate that they had down below for the past couple weeks as the 10-year US Treasury has been declining, NEFQ kept their rates stable at 7.5%. And I noted this as a divergence in the overall in the bond market, in the spread between the 10-year US Treasury and the mortgage-backed security market. And if you remember the article that I noted here, I speculated that that's because there's two major players that have withdrawn from the mortgage-backed security market. There's the Federal Reserve and then the lack of bank deposits that are inflowing as more people keep their money into a money market fund. But now we're seeing that divergence actually come closer together. And what happened in between last week and this Monday? Well, Jerome Powell spoke on Friday about the future of rate cuts and the markets are starting to price that in with rate hikes and rate cuts. Here's what Jerome Powell said directly right here, this middle highlighted version. As demand and supply related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated. Like most forecasters, my colleagues and I anticipate that growth in spending output will slow over the next year as the effects of the pandemic and the reopening fade and as restrictive monetary policy weighs on aggregate demand. So what's he saying there? He's saying that the economy is uncertain. We're not sure. The Federal Reserve isn't sure what lies ahead in the overall U.S. economy. And because of that, they're going to be more careful. They're not going to be so quick just to hike up rates all of a sudden. Now, how is the market interpreting this? If we go back to the same article, you'll see here that the market is pricing in rate cuts of 1.25 percentage points throughout the next year, with the first rate cut coming in March of 2024. March is only a few months away. We're in December here. So we have January, February, and then March, they're going to start cutting rates. At least that's what the market is telling us based on what's going on in the economy. Now, we have very important data coming out this week, the jobs report. We'll see what happens. And if we don't gain as many jobs as we're expecting, then that's going to signal cuts sooner rather than later. But is this all a good thing for the overall housing market? Are these lower mortgage rates, the lowering of mortgage rates, does that mean now is a good time to buy? Or does that mean that there's trouble looming ahead in the future and you should wait until buy because the economy is about to collapse, essentially? The truth is nobody knows exactly what's going to happen in the future. I think that the Federal Reserve and what's going on in the bond market, these bond investors, the people that are purchasing these mortgage-backed securities, they are rushing in to lock their money up at a good interest rate at around 7% before it's too late, before the Federal Reserve is forced to cut rates because something is going on in the economy, or even if something isn't going on in the economy, just because they've gotten inflation under control and now they don't want to completely crash the economy. So they're going to start loosening up rates and try to find a nice balance. Now, I personally think what's more likely to happen is some sort of a recession based on what the yield curves are telling us between the 10-year treasury and the 2-year treasury. So in that scenario, you still have to be very careful about what you buy. You can't look at these mortgage rates and think, great, over a half a percentage point discount on my mortgage. I'm gonna go in and buy the first property, potentially overpay for a home and get yourself in trouble. You got to make sure that if you're in the market looking for a home to buy, that you're purchasing within your limits, that you're not overspending on your property, and you're still gonna have enough money to live and live a comfortable lifestyle. But at the same time, if you know now is not a bad time to buy. I will tell you that a lot of buyers out there are not paying that close attention to what's going on with mortgage rates. So for you as a home seller right there, right now, you're not going to notice a huge uptick in buyers immediately with this 0.6% drop in mortgage rates, which is a very significant drop, but you're not going to see a bunch of buyers flood back into the market, at least not right now. But as time goes on, as people start to realize that mortgage rates have come down a little bit, and if mortgage rates continue to drop, assuming that we don't see major unemployment, then we're likely to see a lot of buyers start flooding back into the housing market, even with the uncertainty in the overall economy. Now, if we see massive unemployment and rates come down significantly, it's tough to say exactly what that's going to do to the overall housing market. If that's going to create bidding wars because supply is still going to be restrained, but more people will be able to afford homes. I mean, in that scenario, at the same time, there's going to be less people out there who have jobs and who have the ability to get a mortgage. So it's tough to say exactly what will happen over the next couple months with all this uncertainty that the Federal Reserve is dealing with, that markets are dealing with, and that's being priced in to investors purchasing these long dated bonds, including mortgage backed securities, which are keeping your mortgage rates low. So to sum it all up, if you're looking to buy, if you've been looking for the past few months and you can find a good deal right now, now is the best time that we've seen in the past few months. So it's not a terrible idea to, if you are in the market, to make a smart choice and lock in some of these lower rates. But at the same time, you got to be careful, have a long-term outlook, make sure that your job isn't in jeopardy, and make a smart choice. Don't buy something that you're going to be stuck paying that's gonna completely ruin your lifestyle. Now, if you're a seller on the other end, I would say to be patient. Don't overprice your home, like I've said many times, but with rates coming down, and if we see unemployment stay relatively stable, or even if unemployment ticks up slightly, there's still not much inventory on the market. So if rates come down because the jobs data doesn't look, because CPI has come down slightly and the Federal Reserve wants to take their foot off the brake a little bit, then that could be good news for you as a home seller because not many people, I don't foresee a ton of people listing their home in 2024 with where mortgage rates are expected to be. If we see massive unemployment across the board, people aren't going to sell their homes unless they're absolutely forced to. It's a really hard time to be a renter right now it's really tough to downsize and purchase a smaller property because that's not necessarily more affordable for these homeowners. So we're likely to see people remain in their homes for the foreseeable future. If rates come down, that's only going to be better for sellers. And of course, it will bring some relief to buyers who are struggling to afford homes right now. So anyway, I hope you guys got something out of this video. Rates dropping significantly was a huge surprise for me. I hope you guys enjoyed it. Let me know what you think. Thank you so much for watching, and I'll see you in the next video.